Imagine buying a couple of pizzas for 10,000 bitcoins back in 2010. Sounds crazy, right? But hey everyone, and welcome back to the channel Money Historian. Well, today, that amount would be worth hundreds of millions of dollars. That single transaction tells you everything you need to know about the wild, unpredictable, and absolutely fascinating world of cryptocurrency. Today, we're diving deep into the story of its meteoric rise, its gut-wrenching falls, and what it all means for the future of money. It all started in 2008. Right in the middle of a massive global financial crisis. Banks were failing, and trust in the traditional financial system was at an all-time low. Then, a mysterious figure, or maybe a group, known only as Satoshi Nakamoto, published a paper. It was called Bitcoin, a peer-to-peer electronic cash system. The idea was revolutionary, a digital currency that didn't need a bank or a government to work. It was decentralized, transparent, and secured by something called a blockchain. At first, nobody really paid attention. It was a niche interest for cypherpunks and computer geeks. Bitcoin was practically worthless. But slowly, an idea began to take hold. The idea of a currency that couldn't be printed into oblivion by a central bank, one that offered true ownership to its holder. This was the spark. Throughout the early 2010s, Bitcoin slowly gained traction. Early adopters, miners, and a few brave investors started to build an ecosystem around it. The first exchanges popped up, allowing people to buy and sell Bitcoin for regular money. Then came the first major boom. In 2017, the world went crypto crazy. The price of Bitcoin skyrocketed from under $1,000 to nearly $20,000 in a single year. Suddenly, everyone was talking about it. Your friends, your family, the news. Crypto was everywhere. We heard incredible stories of people becoming millionaires overnight. This wasn't just about Bitcoin anymore either. Thousands of new cryptocurrencies, known as altcoins, exploded onto the scene, each promising to be the next Bitcoin or to revolutionize some industry. Ethereum, with its smart contract technology, opened up a whole new world of possibilities. From decentralized finance, or DeFi, to NFTs, it felt like a new digital gold rush. But what goes up must come down. And in the world of crypto, it comes down hard. The 2018 crash was brutal. Billions of dollars in value evaporated, and many of those get-rich-quick stories turned into cautionary tales. This cycle of boom and bust would become a defining feature of the crypto market. We saw it again in 2021, when Bitcoin soared to an all-time high of over $68,000, fueled by institutional investment and mainstream adoption. Companies like Tesla and MicroStrategy added Bitcoin to their balance sheets. El Salvador even made it legal tender. Once again, the hype was off the charts. But the party didn't last. A perfect storm of rising inflation, global economic uncertainty, and the spectacular collapse of major crypto players like the Terra Luna ecosystem and the FTX exchange sent the market spiraling downwards again in 2022. The FTX collapse was a particularly dark moment. It was a story of alleged fraud and mismanagement on a massive scale, shaking investor confidence to its core and leading to calls for much stricter regulation. It was a painful reminder that in this new, unregulated frontier, the risks are just as massive as the potential rewards. So, what have we learned from this rollercoaster ride? The first lesson is volatility. Crypto markets are not for the faint of heart. The prices can swing wildly based on news, social media hype, or even a single tweet. It's crucial to understand that this is a high-risk asset class. The second lesson is the importance of doing your own research. Don't just buy a coin because a celebrity endorsed it, or because it's trending on Twitter. Understand the technology behind it, the problem it's trying to solve, and the team that's building it. The third, and perhaps most important lesson, is about security. In crypto, you are your own bank. This means you are responsible for keeping your assets safe. The phrase, "not your keys, not your coins," is crypto gospel. If you leave your crypto on an exchange, and that exchange gets hacked or goes bankrupt like FTX, your funds could be gone forever. Learning how to use a personal hardware wallet is one of the most important steps any serious crypto investor can take. Despite the crashes and the controversies, the technology has not gone away. The core ideas of decentralization and blockchain technology continue to evolve. Developers are still building, and an entire industry has grown around decentralized finance, NFTs, and the concept of Web3, a new, more decentralized internet. Major financial institutions were once skeptical, are now exploring ways to incorporate this technology. They're looking into tokenizing real-world assets like real estate or stocks and using blockchain for more efficient settlement systems. So, where do we go from here? Is cryptocurrency a failed experiment, or are we just in the early, messy stages of a technological revolution? The truth is, nobody knows for sure. The future of crypto will likely be shaped by a tug-of-war between innovation and regulation. Governments around the world are now scrambling to figure out how to create rules for this new asset class without stifling its growth. For the average person, it's about finding a balance. It's a space with incredible potential, but it demands caution, education, and a long-term perspective. The days of thinking you can get rich overnight with a random meme coin are likely overdone instead. The focus is shifting towards projects with real utility and sustainable value. The story of cryptocurrency is far from over. It's a story of technology, finance, and human psychology all rolled into one. It reflects our hopes for a more open financial system and our fears of the unknown. Thank you so much for joining me on this deep dive into the rise and fall of cryptocurrency. It's a complex topic, and we've only scratched the surface. If you found this video helpful and want to learn more, please hit that like button and subscribe to the channel for more content like this. Let me know your thoughts on crypto in the comments below. See you in the next one.